Hello and welcome to the PRIMIS Propositions Vodcast, Hear the Lion Roar. I'm Matt Brown, Head of Proposition, and I'm joined by Nikki Flax, our Proposition Manager. Hi, Nikki.
Hi, Matt, and hi, everyone, and welcome to our next episode of Hear the Lion Roar.
Great stuff. So we've got an exciting guest today, not one we've had on the vodcast before. So delighted to welcome Duncan Turner, who's the Business Development Manager for Cambridge Building Society. Hiya, Duncan.
Hi, Matt. Thanks for having us. Hi, Nikki, as well. Great to be here.
Good stuff. Great to have you on, mate. So I guess before we get started and give you a grilling about the Cambridge, do you want to tell us a little bit about you?
Yeah, I can do. So my background, I started off as a mortgage broker, initially working in a estate agency, and then moved fairly quickly over to the Cambridge, moving into direct advice for us here, and then into the BDM world, which is where I've been working with brokers for the last 7 years now. Ridiculously enough, I know I don't look old enough, but yeah, that's unfortunately the case. But yeah, so that's the mortgage side of me. Outside of that, walking in the Lake District with the dog and the wife, and playing as much cricket and golf as I can get away with is pretty much what I like to get up to.
Sounds good. Sounds very good. And no, you took the words right out of my mouth. You do not look old enough, Duncan, at all. So, right, if you're ready, then let's crack on with the questions. As Matt called it, a grilling. That's probably a bit harsh, but yeah, let's get on with that then. So the first question is from me. So, what does the Cambridge offer our brokers here at PRIMIS?
Yeah, so I think we're a little bit different to a lot of other lenders. First thing to say is I don't think we've been on panel with PRIMIS for a long time. So we've only recently joined your panel, which is great for us. Gives us a new group of people to really talk to and get out our message. But what anyone that has used us in the past might understand about us is that we used to be a regional lender. So up until March 2020, we were regional. We wouldn't lend outside 8 counties around Cambridge. That changed in March 2020. Unfortunately, there was a few other things going on at that time that maybe took the headlines, pandemic or something, which meant they got lost in translation. So a lot of people still think, we still get questions today, are you postcode related or postcode restricted? We're not. We're national. We'll lend all over England and Wales. So that's the first thing to try and get out there to your brokers. We treat cases individually. So we try to make sure that everything we look at is reviewed on its own merits and it's not grouped in with anything else. And that comes down to our individual underwriting. We have an underwriter who will look at every case. Every case that comes through our door, we will get it reviewed by an underwriter. It's all an automated system that's online for your brokers to enter all the information. But we've got a group of 4 or 5 that are just sitting not too far away from me, actually, in the office at the moment, who sit and go through every case. And it just means that we've got that ability to ask questions where the high street lender maybe doesn't have that capacity to do so. And we do that at DIP stage. So we're answering those questions quite early on in the process. We're giving a decision in principle for us is a fully underwritten decision in principle. So we're quite happy that it's a strong, firm decision, shouldn't get changed. The only reason we have problems thereafter is where something appears that we weren't told about initially, or that something's changed in the process as time's gone on. So that's a key part of difference for us. Like most building societies, we don't credit score. We're searching. We're looking at conduct. How have they managed things? So if you pass a credit search with us, whether it's at 30% loan to value or 95, you pass a credit score. It's nice and simple on that front. And the final thing I'll say is why we're different is that we've got great expertise on the phone. We've got a group of 7 business development assistants who will sit there. They will answer your calls, and we generally will pick the phone up within a minute. I think we're working on 40 seconds this month or something like that. So we're pretty quick. You're not sitting on hold for half an hour waiting to get through to us just to speak to someone who's never seen your case before. So that's quite a bonus as well. And all the guys are working towards their CMAP qualifications, so they do want to be in the industry. And I think that's quite a key thing that you don't necessarily find everywhere else you go.
Yeah, absolutely. That's great, and some great services and kind of people being treated as individuals there as well, isn't it? So And obviously something that's changing as well, which the question to ask is, obviously there's people are working longer, retirement age is getting older. How does the Cambridge help with the older borrower?
Which, that individual approach for, first and foremost, but secondly, we don't have an upper age limit on our residential mortgages. So I'll caveat that by saying we do still look at the age, and we do still question the various other bits and pieces, but there is no reason why we can't take a mortgage to, over the age of 100 in theory, if the conditions are correct. So there is no retirement or maximum age on a mortgage for us, unless you are looking at an interest only mortgage. But with the older borrower as well, a lot of the older borrowers do look for an interest only mortgage, so we'll do that on a standard residential up to the age of 80. But with anything, we're just looking to make sure that the income is suitable and will last to the end of the mortgage term. So with earned income, we'll take it to the age of 75, subject to it being a sensible and viable occupation for the person to be doing that, especially things like limited company directors, etc. If you've set up your family business and you're now in the later stages of your life and your kids are working it for you, or so, why shouldn't you be able to take an income from that and for a bit longer? So it's things like that we will be able to sit down and say, yeah, you know what, that makes sense. Let's talk it through. Let's review it. The interest only stuff I've mentioned, we will run interest only mortgages using sale of property up to the age of 80. So you can use that as a repayment vehicle as long as your loan to value is under 66% loan to value. There's no minimum income on that, just needs to meet our standard income criteria, which is typically at 4.5 times income. And so that's pretty much how we can look at those things, to be honest with you. We do offer a Rio package as well. So there's a retirement interest only package there available. And buy to let side of things, we don't have an upper age limit on buy to let either. So we do get a lot of brokers come to us with the landlord that's got 1 or 2 properties that was their pension. Well, they're 65, 67. Some people might say, well, we're not going to let you do it now. Actually, that's not an issue for us. As long as we've got enough income there to cover us for our minimum income threshold, then we're good.
Perfect. I like that you said sensible and viable. 2 of my favourite words, to be honest. So that's good. You just touched on buy to let, so let's stick with that theme a little bit. Lots of changes in the buy to let market over the past few years. What are the Cambridge doing to adapt to those changes?
It's one of those conversations that I've had, and I bet you guys have as well. Oh, the buy to let market's dead, isn't it? It's not dead. It's changing. We went through a real phase where buy to let was it was so easy for people to do, because there were very few rules around it and bits and pieces. We've got more regulation in there, which is understandable. Rental coverage, it's the big probably talking point for a lot of people, a lot of brokers. It's changed. We've adapted with it. We've had to change our rental coverage calculations. We don't differentiate between higher and lower taxpayers. So that's where we're quite easy to deal with on that front. We just run... Effectively, it's 2 calculations. If you're looking at a 5-year fix with us, it's 140% of coverage at the pay rate. If it's any other rate, then you're looking at the pay rate plus 2%, still at 140. So quite simple on that basis. And we've got a really easy to use calculator on our website, which just allows you to pick the product, and it will tell you how much rent you can expect to need, or how much mortgage you'll get from the rent that you're going to be receiving. But we've changed with what we do as well. We now offer expats. So we offer expat mortgages. That is an area where we have seen a huge amount of increasing in the amount of business that we're doing. We do require things like UK passport holders, obviously UK bank account, and we're looking for a UK correspondence address, because we need to be able to find them. Basically, we need a credit profile in this country, for want of a better term. We don't have a countries list where we won't work with people from certain countries. So we don't have a big long list of countries that you have to pick from to find out whether your applicants are going to work. We have one simple rule on that front. We won't work with countries that have financial sanctions against them. So if you're asking for an expat living in Russia right now, it's going to be a no. But, that's the sort of thing we will do. Or we won't do, sorry, but we'll do things like Australia and other bits and pieces where other lenders won't. We've also brought in holiday let. I don't know if you've seen the big boom in holiday let business as well over the past 3 or 4 years, but we brought in that as an area of criteria for us. We get a lot of business from now. Very simple. The holiday let rental coverage calculation is much more favorable. And again, we're looking at the high, medium, and low. We take a 30-week average of that. And if your client is unsure on what they're going to do, whether it's going to be on an AST or on a holiday let, why not look at a holiday let products? Because we will allow them to let it on an AST as well as let it out normally. We don't worry about that too much. We'll allow them to do Airbnb. So it gives them that bit of flexibility on that front. They can live in it for up to 90 days themselves, those sorts of bits and pieces. So there's always little bits of quirks and criteria that, yes, they are. You can often find those individual little bits with different lenders. What we've tried to do is make sure that we've got all of the really good bits and put them into our policy, if that makes sense. So that's kind of how we've worked with the buy-to-let side. Yeah, we don't do as many of the basic buy-to-let stuff as you would have seen in the past. But who does these days? I don't think many people do the basic stuff. It's about changing and adapting with the situation and the circumstances that we find ourselves in.
No, that's perfect. And, I remember a few years ago when people were asking which lenders will help me with Airbnb, and the list was very few and far between. So it's good to hear, mutuals like yourselves getting involved in that. So great, Duncan. Good to hear that. I guess I touched on two of my favourite words. I'll touch on a couple of my not so favourite words in the cost of living crisis at the moment. And it wouldn't be right not to have a conversation around that, as we seem to talk to everybody about the cost of living crisis at the moment. But how are you guys at the Cambridge helping people cope with the cost of living crisis?
Yeah, your watchers or listeners probably get bored of me saying this, but individual approach comes up quite a lot with us. There was a huge amount of noise and the mortgage charter that was brought out really recently overall, it's a fantastic idea. It's really giving people a little bit more help and opportunity. We haven't signed up to it. Having said that, we've looked at it and we've said, you know what, we do a lot of this already. We've adopted some of the really good ideas from it. We've adopted the ability to transfer to interest only. And we've adopted the term extension measures that were proposed in it. So we have taken them on board and said, yeah, actually, on a non-advised basis, that could really help some of our customers. But we've got trained, skilled people that deal with people that are struggling, making their mortgage payments, what they're going to do next. We try and direct anyone who is struggling into those situations. It's talk to our guys. Because if you don't open that communication dialogue, as you know, these things, often end up in bad areas. But yeah, that personal approach, we're trying to take on as much as we can as trying to give people that flexibility. We say if you've got brokers that have got customers that are struggling, then open that dialogue. We'll try and help. There's many a time that I've spoken to a broker where we're looking at trying to help the client through the broker as such, utilizing the broker's ability relationship. That's a great relationship the broker should have with their client. If the client's coming to them and saying, I'm really struggling, well, we're not going to say, well, we don't want to talk to the broker. Let's have that conversation. Maybe we can put something in place that's going to work for everyone on that basis. So we're not going to cut the broker out in that. That being said, we definitely want the customers to talk to us. So we would direct the customers to come to us. On the other side of things, we're offering additional borrowing through brokers, so more than welcome to do that. Product switch options are there. We've got a retention portal. We've just launched it for existing customers, so the customers that want to manage their own side of things. And the intermediary portal is in a trial phase at the moment, so that will be out, I'm hoping, before the end of the year. I was going to say the end of the month, but let's just factor in various bits and pieces. And then the final one, which is probably the biggest one of all, if you're looking at a new customer coming to the Cambridge, is we will stress on a 5-year fixed rate if you're looking at that on a residential basis. So our calculator online is built to just do our standard stress rate, which is at the moment high, unfortunately, due to economic conditions. But the 5-year fixed rate stress is, you're talking at times a 3 or 4% difference between the stress rates there. So you can look at a little bit of different additional borrowing there if that's going to help and this is the right thing to do. So if that's going to work for your customers, then definitely have a look at that as an option for borrowing a little bit more if needed in that situation.
Well, that's great. And I think, again, like listening to all those points on those answers, I mean, obviously, yeah, the broker is always a really important part of the sales and the support afterwards. But again, it just boils down to that individual word, doesn't it? Everybody's circumstances are different, and being treated as an individual like that is obviously going to help, you know, with the cost of living and you know, as doing the mortgage as a whole. So, yeah.
Totally.
Last question from me, and last question today. So, how does being a mutual set you apart in today's market?
Really interesting question. When I came to the Cambridge, I was really interested in understanding why would I go to at the time, as I knew it, a small building society in the east of England. What benefits are there for me going there? And then I talked to the people that interviewed me, and it became obvious that it's not just about the Cambridge. It's about the community, it's about the members of the society and how they can help and go through there. For example, I'll give you a couple of examples. We run a community fund, so we're able to help out different areas of the community that need that help. We've recently, unfortunately, one of our local charities got broken into, had a load of equipment stolen. We've recently given a large donation to that to try and help them get back on their feet so they can continue doing the good work that they do. On top of that, we run charity fundraising throughout the year, as many people do, I know. But myself and the business development team ran a golf day recently where we raised nearly £2,500 for our local charities, Jimmy's, and also for Prostate Cancer UK. So we split the proceeds there. And on top of that, we run a fantastic scheme called Rent to Home. I don't know if you've heard about it, but we basically allow people to rent a property from us because we society and local community, you pick up properties in various bits and pieces through various means every now and then. And we said, well, we rent these out. That's fine. You just do that because it's the right thing to do at the time. We should do more with that. So we now have 4 properties currently, and there's another one in the pipeline where we allow tenants to live in the property. They pay market rent, but they get 70% of their deposit of their rent back as a deposit. So that's helping them get onto the housing market. We've run it since 2019. Tenants can stay in the properties for up to 3 years. So far, we've helped 3 groups of tenants onto the market. If you think about it, a standard, £1,300 a month rent, pretty average market rent. In 3 years, you could be giving someone £32,000 back and saying, go and buy a house. You know, and that's the sort of thing that working for a mutual, you get the ability to take part in, to be involved with, and go from there. So I think that sets us apart. And yes, you see lots of press coverage when banks and building societies make money, and it's all bad. But actually, when you're doing something with that money like that, it makes you think, you know what, we're working for somewhere that really does make a difference in the local community. And the aim is to grow that scheme. You know, we started in 2019 with 2 houses or 2 properties. We're now up to 4, including a family home or 2 in there. So, there's another one coming in the pipeline as well. So we really are starting to push on with that.
Oh,
I love that, mate. I've not heard of that before, and I've not heard of anybody else doing that. Whether they do or not, I don't know. But that sounds fantastic.
Yeah.
What a difference you're making to people's lives. I mean, if you've got one that I can rent and you can give me 32 grand, that's great.
At the minute, I have to say, it is a local thing, so it is Cambridge-based, but we are trying to push it. And definitely a conversation that myself and other members of our team have had is, well, why don't we do this in Birmingham or wherever? Not in our local area. That would make a real difference to people and spread our reach a little bit more. So anything we can do to help that, we're trying to do.
Yeah, what a great incentive and a nice one to end on, I think, a real positive. So listen, we are running out of time, so I'll just leave it there really and say thank you so much for joining us. It's really nice to have a mutual and a small building society on here with Nikki and I. There's loads I've just picked up from what you've said that I probably didn't know about Cambridge. So I think our brokers are going to find that really useful, Duncan. Thank you.
Excellent.
Yeah, thank you
very
Duncan.
much.
Good, great
Really
to have
enjoyed it.
you on, and we'll see you again soon, Duncan. Thank you very much.
Thank
Cheers,
you.
thanks.
Take care.
Cheers.